Hello everyone, so this is our last video in our absorption, variable, and throughput costing series. Okay, let's just have a short recap of our discussion about absorption and variable costing. Okay, so under absorption costing, the components of product cost will be all of these manufacturing costs. So we have direct materials, direct labor, variable overhead, and fixed overhead. While under variable costing, only the variable manufacturing cost will be included in our product cost. So these are direct materials, direct labor, and variable overhead. For fixed overhead cost, it will be expensed outright, or it will be treated as period cost. And the rationale behind this is that for fixed overhead cost, regardless of the operations, regardless whether the company operates or not, regardless whether the company operates in excess of its capacity or less than its capacity, this fixed overhead cost will still be paid and incurred in the same amount. And that's why it is now classified, or it is classified under variable costing as period cost. Okay, so now for our last topic, we have the throughput costing. Okay, so under throughput costing, there is only one component of product cost, and this is your direct materials. The rest of our manufacturing costs will be treated as period cost. Okay, and why is that? Okay, so nowadays, manufacturing companies are shifting to an automated system. Okay, so in this system, labor force is reduced. We would only need machine operators for the system to operate, and thus, labor costs are reduced to an insignificant amount. Okay. Furthermore, these costs, especially labor costs, regardless whether the company operates in a day or not, or operates below its capacity, they will still be paid as long as the employees are within the company's premises. In other words, they go to work. That implies that these costs have a nature of period cost also. Okay, so those are the reasons why the only direct materials are considered as product costs and will be capitalized as inventories until sold to customer. Okay, so let's proceed to the problem. Okay, so problem number 5, Bernabe Company has the following standard costs associated with the manufacture and sale of its products. So we are given with direct materials, direct labor, manufacturing overhead, fixed and variable, and variable and selling expenses. Okay, so in year 1, 51,000 units were manufactured. Of these units, 48,000 were sold. Okay, so sales price is 25. Okay, so production is greater than sales, so we can expect that operating income under absorption costing should be higher than under variable costing. Okay, so number 13, let's answer. How much is the standard production cost per unit for the current year under absorption costing? Okay, so standard production cost, product cost, so it includes 4 components again. Okay, so all of these 4. Okay, so let's add. I'm sorry. Okay, so what that? Okay, so let's add. So 3 plus 2.5 plus 1.8 plus 4. Okay, so that will give you 11.3. So the answer for number 13 is 11.3. Okay, what about standard question number 14? Standard production cost per unit for the current year under variable costing. Okay, so it includes only 3. Okay, so 3 components. So let's just deduct the fixed overhead cost per unit, so that will give you 7.3. So 7.3. Next, how much is the volume variance under absorption costing? Okay, so how much is the volume variance under absorption costing? How do we compute for volume variance? So that's the difference between the normal capacity, so this is your normal capacity, and your actual production. Okay, so for number 15, this is our solution. Okay, so number 15, so we have normal capacity less actual production. Okay, so this is 50,000. Okay, less 51,000. Okay, so we have 1,000 negative multiply by fixed overhead rate, which is 4 pesos per unit. So times 4. Okay, that will give you 4,000 volume variance. Okay, so this is favorable volume variance. Why? Because number 1, of course, it's negative, and the other reason is that this is our normal capacity and we have exceeded, okay, the normal capacity by 1,000. We have not only maximized our normal capacity, but we have exceeded it. Okay, so that makes it favorable. Okay. So for number 15, the answer would be 4,000 negative. Okay, so 4,000. Number 15. Next, number 16. How much is the volume variance under variable costing? Okay, we have already discussed this in our previous videos. Okay, so under volume variance will only be reflected under absorption costing. So under variable costing and under throughput costing, it will not be presented, or we are not going to have any volume variance under the two costing methods, only under absorption costing. So number 16, the answer would be 0. Okay, so 0. Next, how much is the standard production cost per unit under throughput costing? Okay, so we have already discussed this also, and the product cost under throughput costing includes only the direct materials. Okay, so the answer would be 3 pesos per unit only. Okay, now let's compute for the operating income under variable, absorption, and throughput costing. Okay, so sige, let's compute first for the variable. Let's see. So under variable costing, we have so variable. So under variable costing, so our starting point will be sales. Okay, so our sales amounted to how much? Okay, so 25. So this is 25 times 48,000. Okay, so 25 times 48,000. Okay, so this is 1,200,000. Next, we have the variable cost. Okay, so variable cost. Okay, so manufacturing, this is your product cost, and it also includes some selling and admin expense. Okay, so for manufacturing, okay, let's see. Variable manufacturing cost. Okay, so this is your 7.3. Okay. Okay, now for variable selling and admin expense, so we have 25 cents, so 0.25. Okay, so 7.55 if I'm not mistaken. Okay, multiply by number of units sold, again 48,000. Okay, so this is your total variable cost. So 7.55 times 48,000. Okay, so we have 362,400. Okay, so this is your contribution margin. Okay, so our contribution margin amounted to 837,600. Okay, now let's deduct our fixed cost. Okay, so fixed cost, same, it includes manufacturing fixed cost and selling and admin expense. Okay, so for manufacturing fixed cost, this is your fixed overhead. Okay, so we are given with per unit. Okay, so this is 4. Okay, so 4 multiplied by the number of units produced. Okay, however, if the normal capacity is not the same as your actual production, which of the two figures shall prevail? It should be your normal capacity. Okay, so 4 times 50,000. Okay, please remember that. So that is 200,000. Okay, so we can solve that mentally. 200,000. And lastly, for fixed selling expenses, okay, given, this is 75,000 in total. Okay, so now we have net income or operating income under variable costing. Okay, so 837,600 less 275,000. Okay, so this is 562,600. Okay, so that's your operating or net income under variable costing. Now let's proceed to absorption before we solve the operating profit or income under throughput. Okay, so absorption. So let's use green. Okay, absorption costing. Okay, so we have sales. Sales will be the same. Okay, so you have 1.2 million. Okay, less cost of goods sold. Okay, so the cost of goods sold is the same as your product cost under absorption. That is 11.3. Okay, so this is 11.3 times number of units sold, which is 48,000. Okay, so that will give you 542,400. Okay, 542,400. Okay, next, gross profit. So for our gross profit, okay, so this is 657,600. Next, selling and admin expense. Okay, variable and fixed. For variable expense, okay, 25 cents. So this is 0.25 multiplied by the number of units sold. Okay, so 25. So that will give you 0.25 times 48,000. Okay, so this is 12,000. And then for fixed cost given, this is 75. Okay, so how much is our net income under absorption costing? Okay, so under absorption costing, 657,600 less 12,000 less 75,000. Okay, so this is 570,600. Okay, so later let's reconcile. Okay, we're going to reconcile these operating profits. Okay, so for the last one, we have the throughput costing. So let me add another page. Okay, for throughput costing. Okay, so under throughput costing, so let's use black. Throughput costing. Okay, so of course, starting point will always be sales. So this is 1.2 million. And the only product cost would be your direct materials. Okay, so direct materials amounted to how much? Okay, so 3 per unit. So 3 pesos per unit. So 3 times number of units sold, 48,000. Okay, so what do we have? 3 times 48,000. Okay, 144,000. So this is your product cost, 144. Okay, so what do we have here? Less 1.2 million. Okay, that will give you 1,056,000. Okay, so what do we call this? We call this the throughput margin. Okay, so throughput margin. Okay, next. So we're going to deduct all direct labor, variable overhead, okay, and of course variable selling and admin expense, and lastly your fixed cost. So manufacturing and what? Selling and admin expense also. Okay. Okay, so all of these costs under throughput costing, direct labor, variable overhead, variable selling, and manufacturing and fixed cost, fixed manufacturing cost, and fixed selling admin expense, they are all treated as period cost, and therefore they will be expensed as incurred or expensed outright. Okay, so for direct labor, okay, what do we have for direct labor? This is 2.5. Okay, so 2.5 times, okay, is it number of units sold or number of units produced? Okay, class, this should be number multiplied by the number of units produced. Okay, so 2.5 times 51,000, 127,500. Okay, this 127,500 is the total amount of cost that we have incurred for the current period, 127,500. Okay, in variable costing as well as in absorption costing, these are classified as product cost. Okay, and therefore it will only be expensed when the related product, the related goods, the related inventories have been sold to customers. Okay, so that's the nature of product cost. Okay, so they will only be presented in the income statement once they are sold to customers. However, under throughput costing, these costs are now classified as period cost, and therefore since we have incurred for the current period direct labor cost amounting to 127,500, this entire cost will be expensed. Okay, so that's the difference. Okay, because it is now treated as period cost. Okay, now for variable overhead, okay, so we have, okay, so here 1.8. Okay, so 1.8, same, 1.8 times number of units produced, because these are production cost. Okay, so we have produced 51,000 and 1.8 per unit. So how much is our production cost? So 1.8 times 51,000. Okay, so that will give you 91,800. So this is 91,800. This is the entire cost that we have incurred for all 51,000 units. Okay, but they will be expensed outright. Okay, next, we have variable selling and admin expense. Okay, for variable selling and admin expense, so we have 25 cents per unit. Okay, so 25 cents per unit. So 0.25 times, okay, so here's the tricky part. Okay, so this pertains to selling and admin expense. Okay, so it should not be based on the number of units produced, because these are not production cost. Okay, so the fixed selling and variable selling admin expense, okay, will be computed the same way that we compute for them under absorption and variable costing. So it will still be multiplied by the number of units produced. Okay, so 25.25 times 48,000. So we have 12,000. Okay, so this is 12,000. Next, for fixed manufacturing cost will still be the same. Okay, I mean the same as how we compute for it under variable costing. Okay, so we have 4 pesos. Okay, this one, 4 pesos. Okay, 4 pesos per unit. Okay, 4 pesos. And then multiply this by the number of units produced. Okay, however, there is normal capacity, so we're going to refer to normal capacity. So as you can see, these are the differences, okay, under throughput costing. Okay. so just make sure you have understood and memorized the number of units that we're going to multiply by the rates. Okay, so 4 times 50,000, this is 200,000. Okay, so for last, fixed selling and admin expense, it is the same. Okay, so 75,000. So this is your net income under throughput costing. Okay, so we have okay, so minus 12,000 less 200 less 75,000. Okay, so 549,700. Okay, so again, same. 549,700. Okay, sir, how do we reconcile, sir? So how do we reconcile this net income? Okay, so let's just copy here, place here the net income under the other costing method. So under throughput costing, so this is the income. Under variable, under under absorption costing. Okay, so let's see. Okay, so for variable, we have 562,600. Okay, 562,600. And then under absorption costing, okay, we have 570,600. 570,600. Okay, our production totaled 51,000 and our sales totaled 48,000 only. Okay, so the change in inventory, okay, is what? Okay, so the change in inventory is 3,000 units. I'm sorry. So 3,000 and increased because it's positive. Okay, so how do we determine the difference or the reconciling item between these two? Okay, so simply change in inventory multiply by fixed overhead rate. Okay, so here's the tricky part. Change in inventory is 3,000 units and the fixed overhead rate is how much? 4. Okay, so let's see if I'm right, if it's really 4. Okay, so it's 4 pesos per unit. Okay, so as you can see, 3,000 times 4 is 12,000, and when we compute, so positive. Okay, so when we add 12,000 plus 562,600, okay, what do we get? 574,600. Sir, it does not tie up with this absorption costing net income because there is one thing that we failed to do. And what is that? And that is incorporation of what? Incorporation of this favorable volume variance in our absorption costing income. Okay, so I intentionally did not incorporate this for you to be able to remember or to be reminded that this is an important amount that should be incorporated in this income, or else of course you will have an incorrect answer. Okay, but the remedy is you just have to compute for the net income under variable costing, and then the reconciling item will be the same. Okay, so it should be 562,600 plus 12,000. The answer should be 574,600. So this should be the correct absorption costing income. Okay, so when we go back, okay, let's incorporate. Okay, so your cost of goods sold should not be 542,400. So favorable, it means it should be like this: 542,400 and then deduct the 4,000 from your cost of goods sold. So definitely your cost of goods sold will not be 542,400, but rather it should be what? 538. Okay, 538,400 only. So this is your adjusted or correct cost of goods sold, adjusted. But nevertheless, we can actually make this as an adjustment to our net income. However, be mindful of the sign. Okay, so you have to take note of the variance, whether it's favorable or unfavorable. So if it's favorable, as an adjustment to income, it should be added. Okay, but when it comes to cost of goods sold, that's why it's negative, it should be a deduction to your cost of goods sold. But how will this be affected in your net income? It should be added. Okay, so to get the adjusted net income, you just have to add the 4,000 and you will get 574,600. Okay, so this is the correct absorption costing income. Okay, just make sure in the exam you will not commit the same mistake. Okay, so that's a reminder from me. Okay, so okay, it is the same, 574,600. So 570,600 is not your correct answer. Anyway, so for the last one, how do we reconcile the net income under throughput costing and under variable costing? So what's the difference between the two? Is it fixed overhead cost? Of course not, because under both throughput costing and variable costing, fixed overhead costs are treated as period cost. So there's no problem about it. Okay, so what are the other differences between these two? Okay, so the differences lie on the direct labor and variable overhead, because under variable costing, these are still product cost, but under throughput costing, these are now classified as period cost. Okay, so to reconcile, same almost similar formula. Okay, similar formula. So how do we just put a star? Okay, and then here's your formula for the reconciling item. Change in inventory, the same, change in inventory, but multiply by the sum of direct labor and variable overhead rates. Okay, so this is the formula. Okay, so what's the rate for direct labor and variable overhead? Direct labor is 2.5. Okay, so this is 2.5, and for variable overhead we have 1.8, so that is 4.3. Okay, so let's proceed. So this is 4.3 times 3,000. So same, change in inventory. Okay, so 4.3 times 3,000, let's see, 4.3 times 3,000. Okay, so we have 12,900. So this should be 12,900. And sir, plus or minus? Okay, so change in inventory is positive, that's why it should be added. Okay, so let's check. 549,700 plus 12,900. And what do we get? We get the same answer, 562,600. Okay, so if there is a problem in your exam, which may ask about these three costing methods, so you will be asked to compute for the net income under these three costing methods. What I suggest is you just have to compute for the net income under throughput costing and then you reconcile, so that will save you some time. Okay, so that's it for absorption, variable, and throughput costing. Okay, so I hope you learned something. So if you have any concerns, comments, suggestions, just email me at my email address, adcruz@ust.edu.ph. Okay, so see you.